Good afternoon, everyone. Welcome back to Daily News. I'm Lucas from Sales Department of Tariff Matter. Now begin tonight with some big news from steel industry. International commodity market behaved overall positively yesterday. The slight rise in U.S. inflation of 0.1% in February left investors on U.S. stock market unimpressed yesterday. The Dow Jones index closed on Thursday at 39.005 points, increased 0.6%, and the S&P 500 even rose by 1.1% to a new record high of 5.175 points, as start stating today. The German SAR index DAZ briefly broke the record level of 1800 points and it's currently moving sideways just below it. In the second half of the first quarter, the price of stainless-steel CR Coil saw a significant rise in price, as a rising demand created concern about the supply shortage in the European port market. The European Commission's decision is to consign the supply from Asian markets such as Taiwan, Turkey, and Vietnam mill will further tighten the region's supply. Moreover, the rapidly returning rise in energy price has now come to a decline, supporting and production rate of stainless steel in the European mill. Furthermore, the trade disruption through the Red Sea, along with a rise in freight charges, has put the rising price trend to the stainless steel CR Coil in the European port market. The buyer placed large order as demand from the downstream renewable energy and construction sector is experiencing a high roll rate. The recent acquisition of nickel mine PT4 Indonesia by state-owned mining holding company Mine ID has strengthened the Indonesian government foothold in the country's nickel industry. By owning 34% stake in the company, the government is now the majority shareholder and the control of the country's largest nickel concession, without the located in Sulawesi. The government control the country's nickel might be especially critical now amid the current global supply flood that been the flame on the rapid rise of Indonesia's nickel production, which has been boosted by the mineral downstream policy. Without rural production planning, Indonesia might run out of a nickel reserve before it achieves its ambition becoming a global hub for the electric vehicle industry. Suppliers from China plan to continue to shipping steel through the Red Sea, even though on a March 6, a ship carrying Chinese steel product to Saudi Arabia was attacked. S&P Global reported this rating local trading. According to the agency, the two confident vessel was transporting more than 42,000 tons of steel from Tianjin, China, to Saudi Arabia. This was the first Houthi attack on China's steel export and the first further attack in the Red Sea. 3 real members were killed. Following the attack, Chinese traders expected freight and insurance costs on the road rise. Chinese steel export and growing due to the weak domestic demand amid the triple real estate sector. According to the latest Chinese custom data, in 2023, China raw steel export increased by 36.2% year-on-year to the 90.26 million tons, the highest level in 6 years. According to the CAM analyst, the price of stainless steel CR Coil is anticipated to rise in the upcoming months, and the demand is expected to surge from the downstream construction and automotive industry. Furthermore, the rising renewable and clean energy sector is anticipated to post the consumer rate. The supply of stainless steel CR Coil is anticipated to strip on the lower edge as the tariff and import restriction from the Asian country will keep the market rising. The global supply for carbon steel scrap is lagging high demand growth. The shortage could significantly impact steel supply and trade, ultimately affecting economic growth in the both developed and developing nations. Private and public sector stakeholders should begin preparing for the shortfall by calculating the current availability of scrap and developing stock and long-range forecasts. By 2030, today, 9 million metric tons steel scrap surface will become 15 million metric ton deficit. Steel company must focus on locking on a consistent supply, perhaps by acquiring scrapyard and improving their manufacturing capacity with artificial and machine intelligence. In the United Kingdom, on a new reduction scrap rate, the market is down by the 35 to 50 per ton, depending on the consumer. UK demand for that rate is well below reduction level, and so, with container sale not being relevant, it is focusing gross scrap price down beyond old steel scrap price level. The global scrap price fell in most major markets in the early March. In the EU and US, the price came under pressure from Turkish importers who had almost stopped purchasing since early February and were also negatively affected by domestic consumers. Steel producers reported a decline in demand and a low price for finished products. And I'm Lucas from Sales Department of Trade Motor. Stay tuned as we continue to track this development closely. Thank you and goodbye.